Time for business. Kate Moody, of course, our business editor, standing by. Good evening to you, Kate. Let's
Mark.
start with planned job cuts at the food giant Danone, which has angered unions here in France.
Yeah, Danone is aiming to cut around €1 billion in costs per year, and it's implementing a restructuring plan which will turn its focus to local providers, despite Danone being a global company and the world's largest producer of yogurts. Up to 2,000 jobs are likely to be cut worldwide. That's out of a workforce of around 100,000 in total. Between 400 and 500 of those job cuts are expected here in France. It's going to represent about a quarter of the staff at its headquarters in the Paris region. Sales for Danone have really dropped during the pandemic, down around 9% in the third quarter compared to the same period a year ago. Demand for its bottled water, which includes the Evian and Volvic brands, dropped around 20% as restaurants shut, and retailers, meanwhile, have been stocking up on fewer brands. However, unions here in France have accused the CEO of caring more about investors than Danone's workforce. They're especially angry about his pledge to try to boost profit margins to 15% by 2023. That would be a pre-pandemic level. And they say that during a global pandemic, the leadership should really be focused on its staff and on protecting jobs rather than ruthless competition. Shares of Danone, meanwhile, dropping around 3% here in Paris as those job cuts were announced earlier this Monday.
Indeed, so we'll keep a sharp eye on what's happening at Danone, of course, with all those jobs now basically in the balance. There are more signs, though, that the Eurozone economy is in for a tough winter as business activity is dropping off. Kate, tell us more.
Well, it's dropped to its lowest level in 6 months, Mark. This is according to a well-regarded study by IHS Markit, which combines data about manufacturing and services, so really the crux of business activity. Activity in the Eurozone has been dropping fairly steadily since July. It recovered from that complete collapse during the spring lockdowns, but has been slowing down since the summer as more countries impose lockdown restrictions. In November, we saw Germany largely bucking that trend with factory output strong. But France, which effectively shut down its services sector during this lockdown that we've been experiencing in the month of November, dragged down the overall data for the bloc. Now, the economic impact of this second round of lockdowns in Europe hasn't been quite as sharp as it was during the spring, but analysts say that it will drag down overall GDP growth for the fourth quarter and probably hamper the beginnings of the economic recovery that we began to see over the summer. Employers, though, are more optimistic than they've been in months. They're hoping that a vaccine will bring life and, of course, their business as well back to pre-pandemic levels sometime in the next year.
Indeed, worth pointing out. Kate, you're there, I'm here because of social distancing and the rules regarding the pandemic here in France. It's always a pleasure to see you. Nice to see you in the studio, but I understand why you are there. There's been some more positive news about the development of a coronavirus vaccine, hasn't there? How's that impacted the stock markets today?
There has, Mark. Well, we haven't seen the same kind of a stock market euphoria that greeted those initial announcements about a possible breakthrough of a vaccine just about 2 weeks ago. We saw the major European indices closing largely flat, just slightly in the red. Shares of AstraZeneca actually slumped nearly 4% in London, despite the progress on its COVID vaccine, which it's developing with Oxford University. That data showing it might be slightly less effective than some of the predecessors that have been announced over the last couple weeks. Wall Street's mixed as it kicks off a short trading week. Travel stocks are higher, in particular cruise companies and airlines. They're among the ones that could benefit the most from a possible vaccine. The IHS data for the US is much, much stronger than it's been for the Eurozone, with American manufacturing and services actually hitting a 5-year high in November. Now, the ongoing spike in coronavirus cases in the United States has led to more restrictions, notably in New York and California. And JP Morgan Chase has downgraded its forecast for U.S. economic growth. It says it expects GDP to shrink in the first quarter of 2021, underscoring really that the economic recovery is far from a sure thing. That's not affecting investors so far, but of course we'll be keeping up to date with the markets as the trading session progresses today.